What's going on, everyone? Gilman with Wellthy Stocks, back with another video today, taking a look at Pfizer stock, ticker symbol PFE. We'll take a look at how Pfizer stock's been doing, why it's been trending down since the beginning of the year, where it sits today. We'll take a look at recent earnings. We'll take a look at the great dividend that it offers and why I think personally it's a pretty attractive stock. We'll also talk about, where it could go from here. And then, ultimately we'll see if it's a good buy. Obviously that's your decision to make, but I'll kind of point out why I like it, things that I don't like about it, and then the decision is yours to make. So really quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Pfizer are, and I'd love to chat with you guys down there. I know a lot of you guys have been asking about the Pfizer stock, and so here is your update. Let me hit record and we will get right into it. So, well, first things first, if you guys like what I'm using here, I'm using Webull. And if you want to sign up and invest using Webull, link is in the description. We both get some free stocks if you use that link to sign up. Now, let's get right into the video. So let me do a 1 month chart here on Pfizer. And as you can see, right, it's a clear down trend, right? We are pushing down, pretty much started the month here in the 37s going down to the 33s. Now, I understand that the overall market has been trending downward as well. So let's take a look at the 3 month chart and we'll kind of see something similar where and January was a great month for a lot of stocks. But we see it pushing up, reaching a high of 43, rapidly selling off, and then kind of continuing the slow trend downward from that high 37s, which actually weirdly enough makes it a little bit of a more attractive stock for me. Then we'll talk about that in just a little bit here, but what I want to focus on is a couple things, right? So first things first, this article talks about why they are continuing to move lower, and that has a little bit to do with their most recent earnings, right? Their revenue, which was $11.7 billion, beat analyst estimates, but their GAAP earnings of 10 cents per share were below analyst expectations. So that's kind of the bad side, but they also talked about, hey, we're going to do these boosters and it might be like a flu shot where people have to get this COVID vaccine every year. So that is definitely some good news for Pfizer stock, right? If this revenue from COVID, instead of being a one-time revenue, can be somewhat of a recurrence, that could definitely be good for the Pfizer stock as well. So that's what we are talking about. Look, it's currently valued at 11 forward price earnings, and right, it's yielding more than 4.5%, which actually makes it a good value stock. And for those people that don't want the growth of the stock but want the dividend aspect of it, right? So there's two things you could get out of a stock. If you invest in a stock, let's say Palantir, right? Palantir is not going to give dividends anytime soon, if ever, right? Price is currently at the 25. You're hoping for the stock to go from 25 to 35 to 40 to 50. So you could sell some shares maybe, and that's how you make your money. With Pfizer, if you just hold the stock in your portfolio, you're going to get 4.5% dividend right now based on the price it is today. Look, the dividend's going to be like 38, 39 cents a quarter regardless. So if you buy the share at $100 per share, right, the percentage is a lot lower than it is if you buy it at the current price. So that makes it pretty attractive as well. The other thing that's put pressure is that, the treasury yields are going up, which, Pfizer is considered a pretty safe dividend stock. And if treasury yields, which are actually considered risk-free, if they start to go up, then Pfizer stock looks a little less attractive. And that's one of the reasons why, right? So what they need right now is a catalyst. But I also think that, we are going to talk a little bit about why it's still, even without the catalyst where it sits today, not a bad price, right? So first things first, that I want to talk about, I want to actually not focus on dividend for just a second. I want to focus first on the earnings. So if you take a look here, revenue did go down in the last quarter of 2020 just a little bit, but still beat analyst expectations. And then the earnings per share is what we didn't get. So what I want to focus on here is the difference between Pfizer and Moderna, which is another company that I cover. Moderna is expected to do anywhere between 11 to 13 billion dollars in revenue for the entirety of 2021. Pfizer did that in the last quarter of 2020, right? So Pfizer is a much different company. I know right now when we, talk about, or when we think about, Pfizer or even Moderna, right? Pfizer and Moderna, all we're thinking about really is the COVID vaccination because it's so, everywhere, Pfizer, Moderna, vaccines. But Pfizer is a much larger company, and that's why even though they had this, they did jump a little bit. They did run up to the news of the vaccine, and the stock did go up on that. But it's not as big of a deal to Pfizer as it is to Moderna, right? Pfizer is a much kind of widely spread company. Not to say that this doesn't, impact their bottom line, right? $11-12 billion a year to most companies is a really, really big deal. But I just want to kind of focus that, Pfizer does a whole lot more than just the COVID vaccine. So, going off of that, they are, again, this is an article that's really interesting to read because they talk about, hey, Pfizer vaccine is said to be one of the most lucrative drugs in the world. It's sought after like crazy. I mean, we're talking 90% efficacy, right? Efficacy, efficiency, whatever the term is. They're expecting to sell $15 billion worth, right? So that definitely is a great revenue booster for them. They're expecting to earn about $59 to $61 billion, up from $42 billion in 2020. And again, a lot of that increase in in what they're making is because of the coronavirus vaccine, right? So that's great. Sales grow 6% in 2021. And that is, really great to see because the vaccine margins are also going to be 25 to 30%, which could be around $4 billion. So all that is great news. And that's why we really like to look at, other things that they're doing. So, going back to here kind of, how many doses of vaccine they're selling and all that good stuff. It's really interesting to read, on why it's a big deal for Pfizer. I know I just said it's not, as big of a deal compared to Moderna, but still, it is still a big deal for Pfizer, right? So, I didn't mean to sound hypocritical there. What I was trying to make the clear distinction on is when you think of Pfizer, they do a lot more than the COVID vaccine, but the COVID vaccine is still a big part of what they're doing in 2021, right? We don't know if it's going to be a yearly thing just yet. We're hoping it is, but we don't know that for sure. Now, let's talk about, a couple things here. Is it a great dividend stock? So the price that it currently sits at, if you buy a $33, $34 Pfizer share, the money you're going to get per year from it equates to a 4.5% yield. Now, one thing you have to understand is even as the price of Pfizer goes up, which I do think it will, whenever the turnaround starts, you still essentially paid $33, right? So you now get to take in whatever the increase of the price is and the dividend. We'll talk about that in a little bit, but NASDAQ, right, published this article and they're talking about, great dividend stock, and that's Pfizer. What classifies a stock as a great dividend stock? For me personally, okay, it's gotta give me, obviously more than I can get by just putting the money in a bank, putting the money in a CD. That's check one. Check two is, does it give me more than the S&P 500? Very simple. And the reason I do that is, look, the S&P 500 is very diversified. The risk that I'm taking on when investing in the S&P 500, the risk in the stock market is there just inherently. But when you talk about the S&P 500, it is very diversified. So you're not just caught in the downtrend of one specific company, right? It's not just Apple I'm investing in. It's not just Pfizer I'm investing in. It's not just X other company that I'm investing in. So if one, sector goes down, the other maybe is going up, and therefore my investment is a little bit safer, right? So am I getting more than the S&P 500? Because if I'm not, why am I putting my money in that stock? And the third thing is there a history of dividend increases, which, as we'll see in a second, is definitely there. So they currently pay 38 cents a quarter, and they made this article when it was at $41. It's at 30 something dollars now. So it is, you know, it used to be 3.7%. Now it's more like 4.4, which is great. You know, if you invest $25,000 into Pfizer, you could earn, you know, basically $1,000 in annual dividend income. And if you invest that much in S&P 500, you'd earn about half of that, right? So again, those are kind of the criteria that I look at. A, is the company good? I don't want 12% dividend, but I'm investing in a terrible company that I'm just going to lose all my money, right? Second, am I getting paid more than the S&P 500? And third, is there a history of increased dividend? Look, Apple is a great example of this, right? I make Apple videos all the time. Apple's dividend is now trash because Apple more than doubled in price, still offering the same dividend. So their dividend percent right now, let's see, Apple dividend yield, it's probably going to be, you know, not even a percent, whereas it used to be, you know, not too bad. Yeah, so 0.6%, right? Not too great for Apple. That's not considered a good dividend stock. But if you take a look at Pfizer here, right, we go back to, let's say 2017, they paid 32 cents. Then 2018, they paid 34 cents. 2019, they paid 36 cents. 2020, they paid 38 cents. And then I think they did a one-time cash amount, which is great, right, obviously. And then now they're doing 39 cents. So you can see, you know, gradual but consistent increases. And it looks like a cent, but if you add that penny times 4 times a year, times the number of shares that you own, right? Great growth over time. The last thing that I want to talk about is, hey, I talked about, you know, the good of the company. I talked about what it could be, and I'll do a little bit of this up myself on the charts, but if you buy Pfizer today, right, what are you hoping for a year from now? Look, that 4.5% we talked about, that's there. Assuming the company stays alive, they keep producing medicines and nothing crazy comes out that takes them under. I hope not, right? That's the risk with any company, but I hope not. What else are you looking for? Look, this CNN Money article or you know, price target report, even the low side gives you a 7% return if the stock goes up to 36. The median, which is about $40, gives you a 20% return, and a high of 53 gives you a 58% return. Now, my goal for this stock is to be back at 40, which hopefully will give me a 19% return on my money, and then 4.5% on top of that, just the cherry on top dividend that I'm getting for sure. So now let's talk about Pfizer and why I really, really like Pfizer. So, well, not really, really like Pfizer, but I think it's a good longer term hold stock. So what I'm going to do is I'm going to do a 1-year chart and let's see what we see here, right? So one thing again, and I want to point this out, you guys, Pfizer is a stable stock that trades in between, you know, ranges. So other than this time where we you know, broke below kind of the $30 mark, if I put a line kind of right here, for like the couple days in the COVID start in March 2020 that we broke below it, if I draw a line right here, actually I'm going to draw the line even right here, 31, right? Oh, I've hit all drawings, haven't I? And then I draw another line, let's say right even at $40, right? Let me get my horizontal line. Let me draw a line here, not even 40, right? 37. As you can see, in the past year, it's traded very nicely within this range. And so my favorite way of trading Pfizer, first of all, I don't trade Pfizer, I should say invest in Pfizer, is 2 ways, okay? At the end, and again, this is not me saying you should do this, right? And again, we can go back to 2018, we can go back to February 2018, where it's kind of done this. It did stay above this for a brief period of time, but hey, that's good news for us, right? Because that's more upside. Right now, it's getting pretty darn close to the bottom of this. The bottom that we saw in like kind of June, July timeframe, the bottom that we saw in the COVID start timeframe. So what am I looking at? Look, my goal for Pfizer is 2 things. First and foremost, I have it in my dividend long-term hold stocks that, you know, I'm looking to just sit there, give me a little bit of dividend. I'm not nearly close to where I want to be in my dividend portfolio, just because I'm looking for more growth. And as I get more money, you know, longer term retirement, as I get older, I want more dividend income. Right now, I'm more focused on growth. So I am building my dividend portfolio, but not as aggressively as I would if I were, you know, 20, 30 years down the line. That being said, I do still own a couple shares in my dividend portfolio, and Pfizer is one of them. So I'm holding Pfizer there. But the other thing that I like about Pfizer is if I draw a trend line here, and let's say it goes back to, I mean, I'm going to stretch it out to even end of 2021. Okay, I'm going to say November 2021. Let me actually get rid of that because I was totally going to show you something. If you take a look here in the fourth thing, it says plus 18%. That's also what I'm looking at. I'm looking at two things. I'm looking at, I have Pfizer in two of my accounts. One is my longer term swing account where I'm hoping that if it goes back to 40 sometime this year, I get a 18-19% return on my money on a relatively safe investment. I have investments in Neo, Palantir, sometimes in Tesla, and those stocks can go 20% in a week, but that's what makes them a little bit riskier of a hold, right? I do invest in them still because I want my money to grow and I think they have great potential. But with Pfizer, I think it's a relatively safer bet. And so what I'm hoping for is two things. I have Pfizer in two of my portfolios. Again, this is just me giving you examples so you can decide what's best for you. My dividend portfolio where I'm not even looking at it and just getting the 4%. Now, I don't have a lot of it in there, so I'm not making a lot of money, but I'm starting to build that position out. Second thing is my longer term portfolio, not my trading portfolio, my longer term swing portfolio, where I'm hoping that, hey, if I bought this at $34 and it goes back to 40, which I do think it can, if not, you know, if not in the end of 2021, then maybe early next year, mid next year. I'm getting an 18% return on my money. And if it takes a whole year to do it, I'm getting another 4%, 4.5% dividend. So I'm making, you know, 21, 22% on my money. That's my play with Pfizer. You can buy call options. I just think, like I said, it's very range bound. So I don't personally like doing that. If you do get a clear indication of where it's going though, not a bad idea. But if it goes back to here by November, I'm making 18% on my money and getting some dividends along the way. So that's why I really, you know, find the stock to be attractive. That being said, what I do want to focus on always, my channel is not about the upside only. It's also about the downside. We do have downside. We do have downside all the way to let's see here. So we do have downside all the way to, you know, the kind of the low 30s. So it does have a little bit of run room, right? As we've seen throughout the course of January and February, we have fallen and, you know, maybe we don't reverse right now. I'm not at the full long-term swing position that I want to be. Let me make that clear. I'm slowly dollar cost averaging in to be out with kind of a goal of, you know, out 18 to 20% in a year. I'm still building that out. I've started building that, right, with the intention of being out in a year. And the other thing I want to point out is, look, these exponential moving averages are inverted, which means the 89 is above the 55 is above the 34, which means the stock has been downtrending, which is not typically a stock that I like to invest in. But my thinking with this is, hey, worst case, I think it goes down to like kind of low 30s, starts to reverse, and I get some dividends along the way. And like I said, I'm still building my position, so I do have you know, money set aside to be able to buy more if it does go down, again with the intention of a 1-year hold on that return. So that's all I had for you guys today. Hope you guys enjoyed. Hope you guys found that helpful. Pfizer is a company that I don't actively trade, but I like investing in because I like how established they are, and I think that it's a good value stock to have in your portfolio with a really attractive dividend return. So that's why I thought I'd make this video for you guys. Hope you guys are all having an amazing weekend. Let me know down in the comment section what you guys think about Pfizer. Again, make your own decisions, right? I'm just pointing out what I'm doing. You don't have to do it. You shouldn't just do it because I'm doing it. Always make sure to do your own research. Make sure you're educated. That's my goal, is to share what I see. And hopefully, you know, whether you guys agree or disagree, and you can, you know, make your own decision therefore. So that's all I have for you guys today. Hope you guys enjoyed. If you did, don't forget to drop that like, subscribe to my channel if you are new, comment down below what your thoughts on Pfizer are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.